So first, we're going to start off with the accounting standards updates that have come out in 2022. So far, there have only been 4 ASUs to date, and I'm going to touch on each of these in the following slides. First, we have 2022-01, derivatives and hedging, the fair value hedging portfolio layer method. And so the amendments in this update address questions asked by the practitioners of the FASB board after issuance of ASU 2017-12 by addressing 5 items. So number 1 was to expand the current last of layer method that permits only one hedged layer to allow multiple hedged layers of a single closed portfolio. To reflect that expansion, the last of layer method is renamed the portfolio layer method. Number 2, expanding the scope of the portfolio layer method to include non-prepayable financial assets. Number 3, specifying that eligible hedging instruments in a single layer hedge may include spot starting or forward starting constant notional swaps, or spot or forward starting amortizing notional swaps, and that the number of hedged layers corresponds with the number of hedges designated. Number 4, providing additional guidance on the accounting for and disclosure of hedge basis adjustments that are applicable to the portfolio layer method. And number 5, specifying how hedge basis adjustments should be considered when determining credit losses for the assets included in a closed portfolio. And the effective date for this ASU is for fiscal years beginning after December 15th, 2023. Next, we have ASU 2022-02. Financial instruments, credit losses, and troubled debt restructurings. And this ASU was issued to address 2 different issues. Issue number 1 was troubled debt restructurings by creditors. The amendments in update 2016-13 require that an entity measure and record the lifetime expected credit losses on an asset that is within the scope of the update upon origination or acquisition. And as a result, credit losses from loans modified as troubled debt restructurings, or TDRs, have been incorporated into the allowance for credit losses. Investors and preparers observed that the additional designation of a loan modification as a TDR and the related accounting are unnecessarily complex and no longer provide decision useful information. And issue number 2 being addressed in this ASU is vintage disclosures and gross write-offs. Stakeholders noted that there is an inconsistency in the requirement for a public business entity to disclose gross write-offs and gross recoveries by class of financing receivable and major security type in the vintage disclosures referenced in paragraph 326-20-50-6 and example 15 in paragraph 326-20-55-79. And investors and other financial statement users observe that disclosing gross write-offs by year of origination provides important information that allows them to better understand changes in the credit quality of an entity's loan portfolio and underwriting performance. And the effective date for this ASU, if entities have adopted 2016-13, is going to be for fiscal years beginning after December 15th, 2022. Next, we have ASU 2022-03, which is fair value measurement of equity securities subject to contractual sale restrictions. And the FASB is issuing this update to number 1, clarify the guidance in topic 820 fair value measurement, number 2, to amend a related illustrative example, and 3, to introduce new disclosure requirements for equity securities subject to contractual sale restrictions that are measured at fair value in accordance with topic 820. Stakeholders asserted that the language in the illustrative example resulted in diversity in practice on whether the effects of a contractual restriction that prohibits the sale of an equity security should be considered in measuring the equity security's fair value. And the effective date of this ASU is going to be for fiscal years beginning after December 15th, 2024. And finally, for the new ASUs of 2022, we have 2022-04, liabilities and supplier finance programs and the disclosure of supplier finance program obligations. And so the board is issuing this update to enhance the transparency of supplier finance programs. Stakeholders observed that there's a lack of transparency about supplier finance programs because 1, there is no explicit disclosure requirements in GAAP specific to these programs, and number 2, a buyer party may present obligations covered by those programs in the same balance sheet line item as accounts payable or in another balance sheet line item, depending on the facts and circumstances of the arrangement. So the amendments in this update address investor and other financial statement user requests for additional information about the use of supplier finance programs by the buyer party to understand the effect of those programs on an entity's working capital, their liquidity, and cash flows. And the effective date for this ASU is going to be for fiscal years beginning after December 15th, 2022. We're going to start by talking about ASU 2019-12, income taxes and simplifying the accounting for income taxes. So the board is issuing this update as part of its initiative to reduce the complexity in accounting standards. It's called their simplification initiative. And the objective of this initiative is to identify, evaluate, and improve areas of GAAP for which cost and complexity can be reduced while maintaining or improving the usefulness of information provided to users of the financial statements. The amendments in this update simplify the accounting for income taxes by removing certain exceptions to the general principles in topic 740, and you'll see the exceptions on this slide that are being removed. And the amendments also improve consistent application of and simplify GAAP for other areas of topic 740 by clarifying the amending existing guidance. And you'll see that on this slide and the next, there's some more information there about how the guidance is continuing to be simplified related for accounting for income taxes. Next, we have ASU 2020-01, investments, equity securities, investments, equity method and joint ventures, and derivatives and hedging. And the amendments in this update clarify the interaction of these three topics. The accounting for equity securities under topic 321, the investments accounted for under equity method of accounting in topic 323, and the accounting for certain forward contracts and purchased options accounted for under topic 815. The main provisions of this update address two different issues. Issue number one is accounting for certain equity securities upon the application or discontinuation of the equity method of accounting. And issue number two is scope considerations for forward contracts and purchased options on certain securities. How are the main provisions different from current GAAP? The amendments could change how an entity accounts for an equity security under the measurement alternative or a forward contract or purchased option to purchase securities that, upon settlement of the forward contract or exercise of the purchased option, would be accounted for under the equity method of accounting or the fair value option in accordance with topic 825 financial instruments. Next, we have ASU 2020-05, revenue from contracts with customers and leases, effective dates for certain entities. So really, this ASU is really just to delay the effective date of these really important ASUs. In the midst of the COVID-19 pandemic, the FASB delayed the effective dates for certain ASUs for certain entities. So topic revenue from contracts with customers, topic 606 was delayed until after 12/15/2019. And then as we all know, the ASU 2016-02 for leases, topic 842, that also delayed the effective date by 1 year, which makes that ASU effective for fiscal years beginning after 12/15/21 for the 2022 fiscal year. Next, we have ASU 2020-08 codification improvements to subtopic 310 or 310.20 receivables and non-refundable fees and other costs. The board has an ongoing project on its agenda for improving the codification or correcting its unintended application. The items addressed in that project generally are not expected to have a significant effect on current accounting practice or create a significant administrative costs to most entities. And the summary behind this is the amendments in this update clarify that an entity should reevaluate whether a callable debt security that has multiple call dates is within the scope of paragraph 310-20-35-33 for each reporting period. And this update clarifies the financial instruments topic in the codification to increase stakeholders' awareness of the amendments and to expedite the improvement process. Next, we have 2020-10 codification improvements. The board decided that the types of issues it will consider through this project are changes to clarify the codification, again, or correct unintended application of guidance, Again, not expected to have a significant effect on current accounting practice or create a significant administrative cost to most entities. So there's two different sections covered here in this ASU for codification improvements. And next we have 2021-01 reference rate reform. The amendments in this update clarify that certain optional expedients and exceptions in topic 848 for contract modifications and hedge accounting apply to derivatives that are affected by the discounting transition. Basically, in response to concerns about the structural risks of the interbank offered rates, particularly the risk of cessation of the London interbank offered rate LIBOR, regulators in numerous jurisdictions around the world have undertaken reference rate reform initiatives to identify alternative reference rates that are more observable or transaction-based and less susceptible to manipulation. And who is affected by the amendments in this update? The amendments in this update are elective and apply to all entities that have derivative instruments that use an interest rate for margining, discounting, or contract price alignment that is modified as a result of the reference rate reform. The amendments also optionally apply to all entities that designate, receive variable rates, pay variable rate cross-currency interest rate swaps as hedging instruments in net investment hedges that are modified as a result of reference rate reform. Next, we have ASU 2021-04 with various topics here being addressed. The FASB is issuing this update to clarify and reduce the diversity in an issuer's accounting for modifications or exchanges of freestanding equity classified written call options, for example, warrants, that remain equity classified after modification or exchange. The amendments in this update affect all entities that issue freestanding written call options that are classified in equity. Specifically, the amendments affect those entities when a freestanding equity classified written call option is modified or exchanged and remains equity classified after the modification or exchange. The amendments that relate to the recognition and measurement of EPS for certain modifications or exchanges of freestanding equity classified written call options affect entities that present EPS in accordance with the guidance in topic 260 earnings per share. And there's some more information on the second slide there regarding that ASU. Next, we have ASU 2021-07. The Private Company Council, or the PCC, added this issue to its agenda in response to feedback from private company stakeholders indicating that determining the fair value of private company share option awards at grant date or upon a modification to an award is often costly and complex. And when determining the grant date fair value of those awards, a valuation technique such as an option pricing model is typically used. An option pricing model requires various inputs, including the fair value of the equity shares underlying a share option award, referred to as the current price input. And during its research and outreach efforts leading to the amendments in this update, the PCC received feedback that the current price input is typically the most difficult input for private companies to estimate. This is primarily because private company equity shares often are not actively traded, and thus observable market prices for those shares or similar shares do not exist. And the amendments in this update apply to all non-public entities that issue equity classified share-based awards and elect the practical expedient in this update. And then finally, we have ASU 2021-10, which deals with government assistance. So the FASB is issuing this update to increase the transparency of government assistance, including the disclosure of, number one, the types of assistance, number two, an entity's accounting for the assistance, and number three, the effect of the assistance on an entity's financial statements. So, this deals with PPP funding, ERC credits, all the types of government assistance that various companies have received over the last few years in light of the COVID-19 pandemic. This ASU is addressing some of these disclosure requirements that now exist for the receipt of these funds because there was diversity in current practice in the recognition, the measurement, the presentation, and the disclosure of government assistance received by business entities because there was a lack of authoritative guidance. So this helps to address that issue.